Good evening, everyone. You're tuned into Markets Tomorrow. I'm Avan Dabash, and let's just start off the show by telling you a little bit about our experts who will be joining in over the next 30 minutes to guide us through. Amrish Baliga, market expert, will be joining in to chat fundamentals, and on the charts, we'll have Sandeep Wagle, founder and CEO, PowerMyWealth.com. Well, it was a fairly volatile and choppy day of trade where we did see a late recovery kicking in, and it was perhaps the buying activity in the metals basket which allowed us to sustain above the 7,900 mark, where we didn't really manage to stay afloat through the session. You had the advanced decline ratio, which was clearly in favor of the losing side, and it was a very flat close on the frontline indices. Clearly a bounce back in select metal stocks at that is what buoyed the entire sentiment. You had the likes of Tata Steel, Hindalco. Those were counters which did manage to recover quite sharply. In fact, Bank of America Merrill Lynch said that the correction in Hindalco really seems to be a bit overdone. But no respite in sight for some of the power companies which continue to reel under pressure on account of the Supreme Court ruling aftermath. You had the likes of Tata Power, Adani Power, which really had it rough in today's session, along with the JP Power and Rail Power as well. Giving it company on the frontline indices, IBFC, ACC, ONGC were some of the other big losers. And the broader markets, they remained absolutely quiet with a mild negative bias in trades today. Some stocks which did manage to hold out. Take a look at Muthoot Finance after it acquired 30% stake in Sri Lanka-based NBFC Asia Asset Finance. That one jumped about 4% in intraday trades. In fact, you had TVS Motor. The partnership with BMW, according to the company, is going on as per plans, and that the first product will be launched in the next year. And the counter was very active. You had some of the other mid-cap movers that really stood out that I'd like to flag off. Havells India particularly did well. EID Parry held out. Bajaj Finserv and something like an Alok Industries too, on the back of brisk volume activity, was in the limelight on the upside. So let's get in our market experts to discuss what the view is and what directionally one should be looking at. Amrish, I'm going to start off with you. On a fundamental view, it does seem that, the markets, the undertone does seem to be rather positive. But you're saying that you would be a little bit cautious at these levels?
I would be cautious at these levels because we've had a straight move in the last 3 to 4 months without a major correction as such. And if you look at the macro numbers, they've not been too favorable. If you see the IIP data, inflation, and again, looking at the results also, they were mixed. And now you have the Supreme Court order, which has come right now, which again is quite negative for the markets overall. So I think it's time it corrected. Okay,
so a little bit of cautiousness is what we can brace ourselves for. Sandeep, come to you. What crucial levels will you be watching out for, and how do you think we're going to wind up this series?
Good evening. I would talk of a level of a 7,800 on the downside. On the upside, 7,950 is little bit difficult to cross, but once it is done, I think we will be somewhere between 8,000 and 8,050. So broadly, 78 to 8050, this 200-250 points is what I would be watching out. And I really don't think, yes, you cannot buy any and every stock, but I don't think there is a panic sell-off or anything that can bring down the Nifty to 7,500. At any point in time, 50, 70, 80 points correction, I think will be bought into. And beyond that, I don't see a correction. I would be bearish or I would be short-term negative only if 7,800 is broken down on a closing basis.
Well, so far that level certainly looks intact. Amrish, come in on the metals basket because that is clearly dominated in terms of the news flow. Right. Do you think the kind of reaction that we saw in select names like a JSPL, Hindalco has been a little bit overdone, or you think it was warranted?
No, Hindalco, it wasn't so warranted, but most of the others, I think it was clearly warranted because uncertainty is there at least till September 1st. And post that only we'll know exactly where they stand. So till then, I think the weakness will continue.
And you did, as we pointed out, have a Bank of America Merrill Lynch coming out and saying that perhaps we saw a little bit of an exaggerated or, reaction in select stocks like an Hindalco. Sandeep, come in on the charts. Do you think that any of the metals counters, which did manage to recover today, have an attractive buying opportunity? The likes of Sesa, etc., didn't manage to see a recovery. Jindal continued to bleed 20% down in 2 trading sessions. Anything looks attractive from a buying perspective?
Well, Aman, the stocks, most of the stocks, I think, are on a bounce back mode, and the bounce back can be at times very, very sharp and can go beyond your expectation levels. But the basic trend remains down. So the news is very, very negative, is what I understand, and that is what is reflected in the charts. Yes, a Hindalco, a Sesa, Tata Steel did bounce back very sharply. Other than, I think, Jindal Steel, everybody, most of the other stocks did bounce back. But I would rather be more comfortable selling into the bounce back, or at least being away, because there can be again a downside move in case of some negative news or anything, for any follow-up news that may follow. So in that sense, not at all comfortable taking a long position. I would rather exit on all these chances that you are getting to exit in terms of a bounce back. I think most of the stocks will see lower levels.
And just let's talk a little bit about what happened to the banking space as a whole. It has been a fairly volatile week gone by. Yesterday we touched some record highs, but today there was a little bit of selling pressure and much in line with what the market delivered. So a quiet close for the Bank Nifty futures at 15,660. You had quite a few of the PSU banking stocks also, which came under a fair bit of pressure. And from the 12 constituents, although we did see a late recovery, it was in the red for the likes of a Union Bank, Bank of India, a PNB in today's session. Amrish, come in here fundamentally on how you would approach this basket, because we were chatting about how the pressure when it comes to NPAs is only going to be aggravated, what with all the wars and troubles that the power sector and infrastructure sector is going through.
PSU banks, I think the biggest problem is NPAs, and I think this will again come back to haunt them at least for the next couple of quarters. And whatever has happened in the coal sector yesterday, I think that is also going to affect the PSU banks as far as the NPAs are concerned. So I think at these levels I'll be cautious as far as the PSU bank is concerned. Whereas if you're talking of private sector, I think that's the space to be in. But PSU banks, I think one should be exiting to a certain extent.
Any names you'd like to leave us with in terms of the private banking stocks that you'd pick out?
Private banking stocks, really, it would be HDFC Bank, Axis and ICICI among the top picks among the large caps. And the mid caps, I would look at a stock like City Union Bank.
Okay, so those are some of the names from the private banking space, and it seems to be a pretty much consensus view with respect to trading in the PSU banking space. Sandeep, would like you to come in on, some of the pharma stocks that managed to hold out today, the likes of Cadila, Glenmark, Lupin and Sun Pharma, and this has been fairly consistent in terms of a theme that has managed to hold out. Would you bet on any of these based on the chart patterns?
Well, all of them are looking good. Specifically today, I think Glenmark is looking set for a move beyond 750, currently at 728 or so. So 750, 760 is where I think the next target would be. So I would take a trade in most of them. My top pick being Glenmark, followed by a Dishman Pharma. In fact, I think we had a buy in Dishman Pharma in one of the morning shows, and I would recommend Glenmark at this level.
Amrish, how would you be looking at, the overall leadership in the market? Where do you think it's now going to come from? Do you think that some of these consumption names are likely to take leadership, or the domestic cyclicals are also likely to hold out?
Cyclicals may not really hold out, since I'm expecting a correction, at least in the near future. I'm not bearish, but I'm cautious at this point of time, because of which I think the FMCG stocks are the space to be in. And my picks out there would be stocks like ITC, which has not done too well in the recent past, but I expect that stock to go to levels of about 410, 420. The other one is Dabur, which has been a late riser in the last 2 to 3 months and has done extremely well over the last 2 to 3 weeks. That I still expect it to move up further. And the third one is Pidilite, where again we have seen a nearly 100 rupee move in the last 2.5, 3 months. But then that's one stock where there is still further momentum and can go to levels of about 480, 500.
Okay, those are some of the mid-cap names to watch out for. Sandeep, your views on the charts of some of the counters from the broader markets that really managed to hold out in an otherwise quite listless market. Havells along with EID Parry, Bajaj Finserv, how do they look?
Well, Havells was a stock which has given a very clear breakout at a 265 kind of levels, and it has managed to close above that. So any move towards 265 I would add on, or in fact we had a buy today and I would add on, and I don't think the stock should go below 260. So that could be a safe stop loss. So my best stock in the space that you talked of will be an Havells.
Amrish, we had a pretty extensive discussion this afternoon on the crude oil prices and where they're headed, and some of the experts seem to believe that on account of the escalating geopolitical concerns, we might just see, the crude oil prices even go down further. What do you think this means for the overall macro setup for the Indian economy as well as for some of the oil marketing companies?
No, this will clearly help bring down subsidy and actually, remove subsidy overall. For the oil and gas sector, and at the same time it will clearly help on the deficit side too. But will that be extremely positive for the oil marketing companies? May not be, because I think these stocks have already moved up so much in the last close to a year. Some of them have become 3 or 4 baggers. So all this good news is there in the price. So from here on may not be too much of an upside, because if the oil prices come down further, you'll clearly have the petrol and diesel prices also coming down to a certain extent. I think that will be forced onto them.
Some of the auto companies, in fact, were in focus today. You had the competition watchdog, which slapped a hefty 2,500 crore rupee penalty on 14 auto companies. It was a little bit of a mixed basket. Sandeep, comment on the charts of the likes of Maruti along with M&M. Those were the ones that lost quite a bit of sheen in trades today.
Well, Aman, in spite of the news that was very, very negative, there has not been so much of a cut. It is a mild correction. So in that sense, I would still continue with my long position or a positive view on both of these stocks, because I have been positive from much lower levels. Yes, if one wants to book profit, that is another thing. But I don't see a pattern where, based on the news, one should just sell out of this and we will get a 10-15% lower level. I don't think so. I think a correction is an opportunity to buy. I don't see a correction beyond 2 or 3%, which I would add on, and I would talk of a 7-8% higher upside move even from the current levels in the next few days or weeks.
But auto ancillary clearly seems to be the favorite. The likes of Bharat Forge, etc. have been really proving their mettle day after day. What stands out on the charts if you had to take the likes of a Bharat Forge, something like a Motherson Sumi, Amara Raja, all which have been stellar performers, Sandeep?
Well, I have been recommending most of this stock of Bharat Forge, Amara Raja, even a Motherson Sumi. In terms of higher safety, I would go with a Motherson Sumi, because at every lower level, the stock is being bought into, and it has found a very strong support at around 340, 345. I don't see that being broken. Currently at 357, 358, you can take a stop loss of 10 to 15 rupees and look out for a 425 move over the next few weeks or months. So in that sense, a Motherson Sumi would be one of the best picks in this space.
Let's get into the 360-degree view, find out what our top experts are betting on, as well as find out what the dealing rooms have been chatting about with the markets today in consolidation mood. We've got Poonam Sani. She joins in from our research desk to give us a snapshot. Poonam, which of the stocks the dealing rooms are flagging off?
Well, one first is Federal Bank, wherein lots of HNIs and lots of even fund managers remain interested in Federal Bank. It is the top mid-cap pick from most of the analysts. The stock is trading at attractive valuations. In terms of valuations, it trades at 1.2x FY16 price to book. Not just that, management has also taken and continues to remain focused on improving asset quality. In the last few quarters, the slippages coming in from the corporate portfolio have reduced, and the retail and SME slippages also have remained more or less stable. So an improving asset quality going ahead, and also the fact that now the economic slowdown is over, and with the economic recovery we would see better growth coming in for Federal Bank, and that is also likely to improve its profitability. So in terms of Federal Bank, a buy on that. Antique also has a buy with a target price of rupees 158. The next stock is Rico India, wherein media has reported that Department of Post has awarded rupees 2,000 crore worth of order to Rico India as well as to Telecommunications Consultants India, and also the company is looking to expand and grow its revenue twofold. Also, the first quarter saw a huge amount of interest burden coming in, but management does state that that interest cost is likely to reduce going ahead, as they are expecting some amount of fund infusion in the form of NCDs from the parent global company. Do note that this company has grown its revenues to the extent of 50% CAGR in the last 3 years, and HNIs also do remain interested in RICO India. The stock was locked in upper circuit today. So again, the positive momentum in RICO India is also likely to continue.
Poonam, thanks so much for joining in and giving us all of those views. And yes, indeed, it was a stellar move that we saw in RICO India in trades today. Amrish, we've been trying to decipher where exactly we're going to see some offbeat, contra, multi-bagger ideas, because, you never know where they could really emerge from. We've seen some names from the auto ancillary space that have really proved their might.
Absolutely.
Even, some of the small mid-cap pharma or IT stocks. Is there any particular sector that you think, where we could see multi-baggers emerge from?
Shipping is one sector where I think we could see a multi-bagger, going ahead. And when I say multi-bagger, it could take possibly another 2 to 3 years. But that's one space where I think one should, look at buying. SCI, very clearly. If you see the last results, there were a clear turnaround. And it's quoting at a discount to its book value. Book value is close to about 110. So this is a stock which I think one can look at buying at 60. At least the medium term, my view is that we could see levels of about 85 to 88. But then again, if you are able to hold on for the next 3 to 4 years, clearly I think it should more than double. So that should be a multi-bagger.
Sandeep, come in on stocks that you'd be watching out for in terms of trades tomorrow on the charts.
I want to buy in Apollo Hospital, stop loss of 1180, target of 1240. A sell in Allahabad Bank, stop loss of 121, target of 109.
Amrish, if you were to, look at some potential that we could see within the cap goods space, because a lot of people also talk about how you are seeing things improving on ground with respect to the new government. Would you venture into names such as a Crompton or an L&T in terms of, looking at the fundamental story as well as policy traction?
Absolutely, but I think one should wait for a correction, because I was recommending Crompton when it was at the levels of about 90, 95, and from there it's more than doubled. So at these levels I'll not really buy fresh, I'll wait for a correction to get in further. And at the same time, L&T, which I had recommended possibly at levels of about 750, even from there it more than doubled, and then we have seen a small correction. But I think the entry price for L&T should be about 1375, which I think should be achievable over the next 2 to 3 months because of the sort of a correction which I expect.